Eric Muadid, Muadid.com, going into the weekend of June 6th, June 7th, 2015. Let's take a look at how the US markets closed on Friday. Pretty much a mixed picture. Dow was down slightly, S&P 500 was down slightly also, and the Nasdaq was up. We see that the biggest mover in percentage terms was crude oil, up about 1.59, and we also see that the VIX was down about 3.40%. For the week, the S&P 500 was down 0.69%. For the week, the Dow was down 0.9%. For the week, the Nasdaq was unchanged pretty much, down 0.03%. And for the week, one of the bigger movers was the Dow Transports, which was up 2.53%. Before we continue and go to the charts, don't forget to check out this weekend's market analysis video on world markets. And this is for this weekend of June 6th, June 7th, 2015. And this should give you an idea of how other markets worldwide are behaving, and maybe they have some relevance into how the US markets are also trading. So let's begin the analysis by taking a look at the Nasdaq Weekly. On the weekly for the Nasdaq, pretty much an unchanged week. So we are still doing our best, one can say, to either break out successfully or eventually fail to break out above the previous weekly closing high of 5,092.09. So we are still in that range. Anything substantially above that is great momentum indicator. Otherwise, if the market cannot move above that price range, more than likely we might be stalling. So we did end the week a little bit still below the breakout level, and looks like more and more the market can't find enough energy to break out. But you have to be aware, just because it failed one time doesn't mean that it can fail or it can't break out in the coming weeks. And this indecision can be seen very clearly in terms of the RSI on the weekly chart. As you can see, it is still trading within a wedge. As you can see, this weekly wedge goes back a couple of weeks, in fact going back to late 2013. And so recently the wedge has been trading, let's say the wedge began somewhere here. So this wedge has been taking place for a while. We've been coming and looking at this chart every weekend during the weekend analysis, and we seem to be talking about the same thing. So eventually we might break out for a very powerful move higher, or we might break down on the weekly chart for a strong move lower. We take a look at the Nasdaq Daily, and we see here that we came close to the 50-day moving average and held. As of right now, you can see the daily shows clearly the market's inability to break out, so unable to break out here. That could be a problem, but it's not necessarily broken. It's still sideways action. We see that on the daily RSI, it can seem to move above this line of resistance. And this past week, we saw it come back to that line and fail again. So which is also stalling the market from moving higher. The one thing you can see here is that in terms of pullback, the market continues for now to remain above this line, where it's been coming to this line and holding support. And so really the daily seems to be in type of sideways action. When we move higher, we get resistance on the top side, and recent pullbacks have been coming and finding support on this line. So we also see maybe another wedge developing in terms of that daily RSI. Take a look at the Nasdaq Hourly. Just want to show you one slight observation here. At the lows of the day on Friday, we can see that the market had come back. So at the lows somewhere here, and actually even late Thursday, the market was moving lower, but you can see that on the RSI for the Nasdaq, and in this chart I'm using RSI period of 14, you can see that it came back to the lows line on the RSI and held. So that gave us an idea that the market looked like it wasn't going to break down because of that hourly support on that lows line connecting recent lows here. And as of late yesterday and early today, the market held support there. Could be the reason why it did not close with a bearish candle. We take a look at the Dow, and on the Dow Weekly we can see that now we continue to trade away from the weekly breakout attempt, so we can look back and say this is a failed breakout attempt. Failed breakouts are notorious for killing markets, and so more and more it opens the possibility for lower prices. One thing we can also see that on the top side of the hourly for the Dow, actually for the weekly chart for the Dow, we can see that the weekly came back to this declining line of resistance, hit that level about 2 weeks ago. Since then it's been having weekly drops. So as we go into the new week, a level to watch is the fact that the Dow ended the week with its RSI just a tad bit above 50, which means that if it cracks below 50 in the coming week, expect a big down week into the close. So if it cracks below 50, more than likely we might see a big drop in the market week to week. We also see that there's a line connecting recent lows like that, something like that. Or let's put it this way, the Dow needs to hold that 50 level, otherwise if it cracks below that 50 level and also breaks this line I just drew here, that would indicate that momentum is to the downside. Right now we haven't seen the break, so let's not be too quick to predict that the market is going down. We take a look at the Dow Daily. Dow Daily slightly below the 50-day moving average, but I don't think it's broken. The reason why I say that is if you take a look at the daily RSI, the market has just come back to where it's been finding support, and if it can find support right there on this green line, if it can find support on this green line again, then that's just an indication that eventually it moves higher. Some of the bigger drops over the last year or so, for example this pullback, did find support there. Even this big drop, support was seen here, and we see that also is another drop here which corresponds with this major drop. Market found support, uniform activity below the line, back above it for this drop, and even here during this drop. So coming to this level, if it holds, one can assume that the market is just pulling back before it tries to break out again. If we take a look at the Dow hourly chart, and in this chart I'm using RSI period of 26, we can see that most people are watching this break of this trend line here on the price, but personally I don't think it's a big deal. I don't think that's a major break. Of course we're talking about this break here. Of course we'll see. I could be wrong. The reason why I say I don't see a major break, and I don't think it means a lot, is because of two lines. Line number one, the market has come back to this level here where it's been finding support, and if you pause the video you'll see that yes, most of the lows over the last couple of months have been coming and finding support on this line. Number two, if you draw a line connecting RSI lows recently like that, you can see at the lows of Friday's close the market still showing that it could find support on that line. So my thinking here is more than likely if those two lines hold, the market has a chance of moving higher. Now if we take a look at the Dow Transports, which really turned a lot of people bearish over the last couple of weeks. If you recall, and if you can go back to last weekend's market analysis video, I discussed this wedge and this breakout sometime late 2011, which brought the Dow Transports off these lows here. So there was an entry here on hindsight that was perfect, and so all we have to do is draw a line like that based off this ideal entry here, and you can see the market has used that on several occasions to make and predict short-term lows for the Dow Transports. We came close here, and now we are bouncing exactly on the level that we discussed last weekend, which means this strong week of 2.5% makes a lot of sense. So if the Dow Transports are finding support, my thinking is that the general market should be okay. Also, there's another line that we've been drawing and watching the last couple of months, this line here. As you can see, we talked about this even before this week, that this could turn out or end up being support. This line was breakout here beginning of 2013, and the market broke out during this phase here. Nice entry on hindsight. Since then, the market has been coming back to this level and showing support. You can see here support on the line with backtest, support on the line with the backtest support, and again we can see here recently it came back to this level and held with uniform activity below the line back above it, which was that level. And now we see that this past week it's coming back here and probably weaving itself below the line and back above it. So if that's the case, if it moves back above the line, then that would suggest that it is time to get back into the Dow Transports, if that's the case. But I think it could make more sense because it would confirm support from this line, number one, and then secondly, just confirm that this back test has been recaptured and that the Dow Transports are okay. In fact, if we take a look at the daily for the Dow Transports, we can see that it came back at the conclusion of last weekend, and we begged the question whether this was going to be a double bottom support on the daily RSI, which is exactly what we got. And for the past week, the market has had a nice bounce. So the Dow Transports, I think, are showing that they have found some stability in terms of the daily, weekly, and you also, if we take a look at the monthly, so this is a long-term monthly chart for the Dow Transports going back 2006. On the monthly RSI, all you have to do is draw a straight line connecting the previous highs here in 06, the highs of 2011. You see that there was a breakout, and this breakout launched the Dow Transports into a nice rally here. So this was a nice breakout. Market went into a major run, and so now I think what we are doing here is basically back testing this line. As long as this is holding on the monthly for the transports, I think the market is telling us that the Dow Transports are due to bounce, which might actually be a good thing for those who want the market to go higher. Otherwise, as long as this is holding, one can assume that the Dow Transports have stopped their recent slide. On the other hand, we need to watch that line for the future, just in case at some point we break below it. If we break below that line, that would suggest a market that wants to go down. Quick look on hour-to-hour basis, we see that the Dow Transports did end Friday's session with a little bit of a resistance coming back to the top side of the hourly resistance here. As you can see, this is where the Dow Transports have been stalling, and so depending on how they trade, you can see that the most recent high, for example here, was during this recent short-term high, resistance on those two lines, short-term high, and on, resistance here, short-term high. So that's been the case, and on. You can see that this is where the Dow Transports have been struggling. So for the Dow Transports to move well, they need to break out above those two lines. So only a breakout is going to give the Dow Transports another reason to move higher. Also, as far as the price is concerned, you can see here this was support on multiple occasions on the hourly chart. Support, 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 support. Anyway, it was support for a long time, going back to November. So between November and let's say about May of this year, it's a long time. Market's been holding steady there. Since then, we've broken below that level, and now it looks like this is going to become resistance, as you can see here. Ever since the break, market's been unable to move above that. So for the Dow Transports to do well, it needs to be above this line of resistance, and also needs to be above this short-term line there. Otherwise, we could be looking at a potential pullback from current levels. Otherwise, weeklies, monthlies, dailies look great. Let's take a look at the VIX daily. see what they're doing on the daily for the VIX. We take a look at a 6 months daily, and just wanted to show you is the line we've been watching for resistance on the VIX is right there, and previously it gave us a short-term high on the VIX and the market was a buy. All throughout this period, every time it comes here and shows resistance, the market bounces all these levels. So since we are seeing the same type of resistance here, as long as this resistance is held and the markets pull back, as far as the VIX is concerned, that would suggest that the general market is in play. So that resistance on the VIX is actually something the market bulls want to see. Otherwise, if you'd like the market to go down and you're looking for prices to go down, then you'd like the VIX to break out above that line of resistance. Take a look at the VIX hourly, and we can see that on the VIX hourly, it's come back to the same line that we've been drawing the last couple of years right here, and we seem to have stalled. So we stalled here late Thursday and early Friday morning, and as such is the case, we have to assume that the market is telling us the market wants to move higher and the VIX is going to pull back. And throughout all these highs on the VIX short term, this is where the market has been coming back to life after short-term pullbacks on the Dow, Nasdaq, and the major markets. This has been a good tell for trading the general market. Every time we see resistance on this line, it means the VIX pulls back and the major averages start moving back after they've pulled back. So recently, over the last 2 days, resistance here suggests the VIX pulls back and the market moves higher. Let's take a quick look at Apple, which continues to trade above its 50-day moving average. So it's still trading well, off the highs of course. Seems to be resistance around 132.5. So that seems to be resistance, but as of right now, it looks like we have daily support on the daily RSI line connecting the recent lows. So even though it's pulled back, I think as long as this line holds, this stock is eventually going to bounce. So this here could be support. If it holds, one would expect it to move higher day to day. Otherwise, if we break below that, break of that support line, maybe we are due for another drop lower. But for now, since we ended exactly on the line, one has to assume that that's for a reason, which probably means more than likely this holds and is support and the market moves higher. Before we conclude, don't forget to check out this weekend's world market analysis for the weekend of June 6th, June 7th, because I think what we are discussing here is also going to be reflected, as you will see, on other world markets, which suggests that more than likely there's some consistency in how these charts are shaping up. Okay, let's take a look at how the monthlies are looking. We can see here the S&P 500 continues to, right now actually there's a change, and the change is the fact that SPX is now trading below 69.1, and anybody who's bearish the market would like this to be the case. As long as it remains below 69.1, that would suggest that it has probably could stall, but we need to watch any potential future breakout attempt above the recent monthly closing high. The level to watch there for the SPX is 2104.50, which is this previous monthly closing high. Right now we are looking at a failed monthly breakout, which could be a problem, but the key is if it continues trading below 69.1, we could have a situation where the market pulls back. Keep in mind, S&P 500 has generally been staying above 69.1 throughout this period here. This bullish phase has been with the S&P 500 trading above 69.1. I've been saying that as long as the markets are above that level, the markets should move higher, but if and when they move below 69.10, it just means that now there's a possibility of a pullback, and this is exactly what's going on with the markets on the SPX trading below 69.1. Take a look at the Dow, and you can see the Dow as of right now has failed to break out above the previous monthly closing high, which is a problem. So anybody who's looking for reasons to remain bearish or reasons to be bearish, you can take a look at this monthly chart and see that the Dow has failed to break out, and the level for the Dow to watch was 13132.70, and as long as it is trading below that threshold, it suggests that it could pull back. We can also see here that RSI is definitely not above 69.1, so this is opening the possibility for lower prices. So let's just keep watching that. So this does open the possibility for markets to stall, and that's something we need to watch. Take a look at the Nasdaq. The Nasdaq continues to hold above its previous monthly closing high, and also as of right now the Nasdaq is still holding above 69.10, something it's done since March of 2013. So since this level here, market's been trading above 69.1. So the Dow and the SPX look questionable. Actually, the more they stay below 69.1, the more they might stall, and so we need to watch the Nasdaq to see whether it too moves below 69.1. So the monthlies are asking a great question on the market. We'll see which way the market picks. Otherwise, for now, if you are to summarize this video, I'll take you to the S&P 500 daily, and on the daily chart for the SPX, this needs to hold. If it holds right there, then the market bounces. Otherwise, if it breaks, then we are entering a bearish phase. Eric Muadh with Muadh.com. Good luck, peace, and blessings. Yeah. Woo. ECS.